Today I'm talking with Packy McCormick, the founder of the Not Boring newsletter and Not Boring Capital. Not Boring Capital is a VC fund that, quote from the website, invests in early stage companies that combine sci-fi technology with a viable business model. So what the heck does that mean? Well, I get into that a little bit with Packy in this conversation, but what prompted me to reach out to him originally was not too long ago, he put out a 4-part series around this concept of vertical integrators that's highly relevant for the theme around decentralized production. And as you all know, my goal at Going Direct is really to help build a community of the entrepreneurs, builders, and creators that are building this future of decentralized production. So in this conversation, we really break down what Packy means by vertical integrators and his work of both writing and investing in these types of companies. I think you'll find extremely insightful and interesting. Now, Packy's mission is to make the world more optimistic about technology. He's thoughtful, well-read, and full of positive energy. The conversation was a lot of fun for me and highly relevant for the themes that we're going to be talking about at Going Direct. I hope you enjoy it. And always remember, go direct. All right, Packy, how you doing, man?
Doing great, Jordan. Thanks for having me.
Sure. Thanks for coming on. Well, listen, there's kind of like many reasons, but 3 specific ones where I was like super jazzed to get connected with you through Alex over at QB. I'll start by kind of the mission of Not Boring, which is to make the world more optimistic. And it's interesting. And I discovered your writing a few years ago. It's kind of my big aim with Going Direct is how do we take a much more optimistic lens and how we can make commerce more human. And I'm actually super excited for the future. And if applied the right way, I think it's just like so exciting. It's very actually intoxicating for me. So anyways, I felt like a very kindred spirit as it relates to kind of what you're doing at Not Boring. The second, I guess more practical is, and we'll get into this, but kind of your thesis and themes on the investment side highly align with my angel investment activity and have a few a few of the similar and same investments. So obviously there's a lot to talk about there. And then
Clearly
thirdly, yeah, for sure. And then thirdly, and we're going to run into some of your concepts. Your recent memo on human strategy memo.
Yeah.
Just like kind of put me over the top. I'm like, okay, we got to talk.
That one, it's funny. I like put the weirdest stuff I can out there, and that's the stuff that people respond to the most. And so I'm like, all right, cool. I'll just keep getting weirder. This is great.
It was great. It was a great read, and I've recommended it around a bunch of people. So,
thank you.
Okay, cool. So I'm going to start with this, okay? Because I'm going to kind of dive into some of the topics that you write about. Can you explain to the audience, because I want the audience who might not come from this world to kind of a better understanding of kind of what you mean by this, but what do you mean by the Techno-Industrial Revolution? What does that mean?
Yeah. I guess if you look back through history, there's a bunch of ways to view, I guess, the moment that we're at in history. One of them, and I think it's ending, but Tyler Cowen calls kind of the past 50 years the Great Stagnation. There's this idea of like what the F happened in 1971 to 73, somewhere in that range. What the F happened in the early kind of 1970s, where you have total factor productivity. It's like climbing like this, falls off like this. You also have, like, coincidentally or not, kind of per capita energy consumption per capita also kind of falls off a cliff at that same point. But there's a million different graphs that kind of fall off at that same point. But really, like, I think the way that to me, the simplest framing of the history of the world from a tech perspective is like all of the innovation that humans did was in the physical world, in the world of atoms, up until right around that point. And then we had 50 years where we're like, let's run as hard as we possibly can at software. And we picked a lot of the low hanging fruit in software. Obviously, there's a bunch of interesting stuff happening in AI right now. But it really feels like we're at this moment now where a lot of entrepreneurs, one, because we have the software tools, 2, because people have seen kind of SpaceX and Anduril and realize that you can build these really big companies that kind of combine the bits and atoms. I just think that we're in this spot now where people are like, all right, cool. There's a lot of crumbling stuff around us. How do we rebuild all of that infused with software and like kind of these other, a bunch of other things? Like, I think, bio is at a much more interesting spot now than it was before. Materials are an interesting, batteries, I think, and electrification generally, like, have huge implications for kind of the types of products that you can build. And so we're at this moment now where there's really an opportunity to rebuild kind of everything that we've built in the past in a more modern, kind of electrified and software powered way. And so that to me is kind of the techno-industrial revolution.
Cool. And then you have this, you make this comment that, I'm just going to read it. I have a couple notes here. So you say, just as aggregators built some of the biggest companies in the internet era, vertical integrators will be the biggest winners of the Techno-Industrial Revolution. And so can you kind of explain to me what is a vertical integrator in its most basic sense?
Yeah, the name I like, it's essentially just like a vertically integrated startup. And I was playing with the Ben Thompson's kind of aggregator, vertical integrator. I don't know if it's like the perfect name. It's not like the catchiest name, but it does describe kind of what it is. So aggregators were like, Uber, Google, Facebook, whatever. You like put a software layer on top of this thing that happens already. You have zero cost of, the good ones, zero cost of demand, zero cost of supply. And you're like in the middle aggregating eyeballs. And because you have all the eyeballs, you have power kind of over all the sides of the marketplace. And I think, there's been a million Uber for X's and, you've tried to build new social networks and like all this stuff. And I think like really the categories that were like best suited to be aggregated have been aggregated already. And they're things like really where information is kind of like the currency. And that's, Uber is physical cars, but like matching a rider and a driver is like actually the thing that is like the kind of like core transaction there. And so a lot of those have been taken. I think the opportunity now for vertical integrators is kind of what we were talking about before. You have the ability to combine, kind of new physical technology, software, intelligence, all of this into products that are better, faster, cheaper, at higher margin than the incumbents. And I think if you can get those characteristics, you win, and you do that by kind of vertically integrating. I think there's a lot of excitement around deep tech, which I view kind of more as like a science, and like really taking a risk that like this new capability that humanity's never had, like may or may not happen. Yep. I think a kind of a step, kind of more, a step beyond that is this vertically integrated company where there's things that are like very cutting edge, but proven. Like there's no science risk. It's really like, how do you design the best system, taking the kind of building blocks that we have right now, put them together in a system that does produce those things that are better, faster, cheaper, higher margin.
And is that, so that part about, this multiple cutting edge, but kind of proven technology, is that really come down to this fact at this time where now we actually have the software tools and now increasingly the automation tools to actually start actually integrating these things into the physical world? Is that kind of where that comes from? Or?
Yeah, I think that's, software is a huge piece of it. Like I can't think of any in the portfolio that don't have software involved, but I will say like it is different for different things. So I'm like, think about an astromechanic, which I read about, which is building, supersonic planes using turboelectric adaptive jet engines. And software is like certainly important there. But I would say the big breakthrough is that like batteries have gotten cheaper and smaller and more compact and just like pack more punch. And so you can fit, more battery for less mass on a plane. And then you can make this engine that never would have worked before in any practical way work. And so like, that's the big thing there. I think on the biotech side, certainly comp bio helps, certainly AI for drug design and all that helps. But like, there's also just a bunch of different things that, Elliot, who's our biotech partner, talks about, the 4 S's of synthesis, sequencing, software, and scale. And so software is one of those pieces, but there's just a bunch of interesting stuff happening there. I think that is what makes this moment so exciting for me, is that if you're an entrepreneur, you don't just have like, how do we apply software to a thing that we already do? There's like 100, probably 6 like major categories, but like 6 major categories of building blocks that you can choose from and mix and match. And we haven't even gotten like super wild where, are you building, Elliot's talked about this idea of like atoms are local, and you can, to your point, if you're kind of building with factories, like, do you do that with atoms, these things that are like, with biology, it's like, trees grow everywhere by themselves. Like, how do you do that for everything else? And we haven't gotten that wild yet, but I do think it's a little bit software, but really just that there's a lot of these puzzle pieces that we just like, haven't played with for 50 years. A lot of I've written about this before too, but a lot of the ideas that people are talking about now, like if you ask like where it came from enough times, it's from a either Russian or American paper from the 90s or 1960s. So like these ideas have been around for a while, and we've just kind of let them sit there. And now people are kind of picking them up and applying modern technology to them. And so it just seems like there's a ton of space here.
Yeah, it's, there's a lot to unpack there, but I want to go to this next thing. So you have this, I'm just going through the number, like you have this kind of 5-point thing on vertical integrators, right? And the second thing you say is these vertical integrators develop significant in-house capabilities across the stack, right? And so that's like counterintuitive to where it's like focus on one really small piece of something, do it really well, or focus on this really specific niche versus like you're essentially building multiple companies in one company.
Yep.
So let's talk to me a little bit about that.
Yeah, it's the hard part and the hard to catch part. I think like both, it's the moat and the difficulty. And I think those two are often two sides of the same coin. I think like one of the comments that I got from somebody on the first vertical integrators piece that I wrote, and I wrote it as a 4-part series, was really about like, it's not this static thing that like vertically integrated companies are good and like these modularized components and like, specific products are bad. It's like really, where are you in the cycle? And so the second piece I focused on was kind of like the Carlota. There's older idea, the 100 TF waves, and then Carlota Perez's Techno-Economic paradigms, which kind of say the same thing, which is like every 50 or 60 years, everything is up for grabs again. And we like enter the new world, whether it's like, steel or oil or electricity or information technology. There's these like whole new paradigms, which give you the opportunity to like really kind of rethink the kind of companies and systems that the world runs on. And in the beginning of those, I think the big ones are the ones who are like, all right, this world is crazy. What do we do here? We have to like totally rethink things. And so it takes a company that's willing to like play with all the different permutations and figure out what the right new kind of structure is. For the whole 50 or 60 years, those end up being, I think, the biggest companies in if you look at a lot of the techno-economic paradigms. So like, if you get that timing right, it's almost more important than like almost anything else. But then over time,
can you give an example of that?
For the Standard Oil in the beginning of kind of the oil age did everything, right? Like, so they did refining, but then they went upstream to do the drilling. They went downstream to refining. Whether or not they actually, owned the transportation themselves, in some cases on the pipeline side, but like they had enough muscle that they just made transportation do whatever they wanted. They're like, all right, we have this new thing, oil. We don't actually really know quite what it's good for yet. It replaces whale oil and candles and it does all this stuff, but like, let's refine it and like see kind of like where the different markets are. And so like they did a bunch of stuff, and it, like took advantage of this new opportunity, did a bunch of stuff, and then like brought the cost down by vertically integrating and by exerting their muscle, which broadens the market for the product, but also just kind of figured out themselves, like what are the different kind of uses for this new thing that we have here. And I think it takes some of that, like you have to kind of do everything and you can't be like really specific because you don't even know what you're being specific on yet in the beginning of one of these.
Mm-hmm.
And so, I think we're kind of in one of those same spots now. And then over time, like as the new systems are in place, you'll notice that certain components in the system aren't as good as other ones or like there's opportunities to improve particular pieces. And so then over time, whether it's the company themselves or new companies come in and try to like improve those specific components. But I think that can be like, that can lead in the specific company case to the sclerosis that creates the opportunity at the beginning of the next techno-economic paradigm for somebody new to come in. And it's like one of the challenges of being a big company is how do you avoid being the company that's just gotten too stuck in trying to like optimize as opposed to like building the best possible system.
This is an interesting kind of transition to the incumbent side, right? So like, it's something I think a lot about, which is really hard, obviously. What we're all searching for as funders of the early stage enterprise and the builders and people looking to disrupt the incumbents. But it's really hard in the physical world. Like they have so much market power, right? Especially around distribution, right? Yep. So that's kind of a big piece of mine that I really like to unpack. And what's interesting is you kind of have another point here, which you mentioned, which is obviously another aspect of this vertical integrator piece is like they have to directly compete with incumbents. And this is what's like fascinating, I think, intellectually about kind of how you've broken this down, which is typically you're like, well, you need to have need to have a common thinking is a traditional scientific or technological innovation that allows you to produce something at a lower cost than the incumbent, right? And you kind of make the case for like, it doesn't necessarily need to be like the actual innovation is the integration.
Yes.
So like, that's like, I don't know, have you been able to kind of identify when that magic happens? Like, or the features around when the integration being the innovation is enough to compete with the incumbents?
I mean, I think it shows up in the techno-economic analysis, I guess. And I read about this a little bit, but like whether it's a total scientific breakthrough that you've made yourself or whether it's you just like building a system that ends up being cheaper, I think that has to show up, even though there's a lot to be proven. It has to show up in, if we do this, this is what the numbers look like. And here's why we operate at, in the case of one of our companies, like $2 per unit versus $7 per unit. And I don't want to give away too much of what the company is, but 2 versus 7 and at higher margins in this industry that is like super competitive and low margin right now. And so if you can get that, and it like takes a while to build the thing, and like there's engineering challenges galore and all of that, but like if you get to that point, it's almost kind of like checkmate, because the thing is just so much cheaper, and you have a business buyer. And like at some point, if the company that you're competing with, like just structurally, because it's a completely different product, can't respond, you kind of win that. It's a kind of checkmate if you get the thing built. That one's maybe like a little more. There's certainly existing relationships that the incumbents have, although I think the buyers are still pretty price sensitive across the incumbents, and so it's a bit of a different situation. I think in a lot of cases that distribution advantage is like incredibly real, and you think that the hard part of these companies is like, oh my god, they're doing these crazy engineering things, and what they're really doing is, and like that is true, but like what the real challenge and where the rubber hits the road is like, how do you actually sell this thing and prove to people that that is an advantage? We're about a company called Meter, which is competing with, I guess Cisco is probably the most direct competitor. And that's like, I mean, Cisco is a distribution company. They have like, 90% of their revenue comes through partners, and enterprises just kind of trust Cisco and the kind of MSPs that sell them and manage them. And they have that whole kind of system built up. Or, I was a big Slack bull. And the thing that I got wrong on that, and luckily Salesforce saved me, but the thing I got wrong on that was like Microsoft's distribution. Even with the worst product, I still don't like using Teams, but it doesn't matter. Like Microsoft's distribution is just insane. And so you can get killed by that. Meter actually just announced a partnership after I wrote the piece. 2 weeks later, announced a partnership with Microsoft. And so I think like you have to be really smart about what you own, and they own kind of vertically integrated end to end, the hardware, the software, the operations on this kind of, the network as a service, or networking kind of hardware and software.
Okay.
And so because they have that, then you can go partner with a Microsoft and work on distribution that way, and team up with someone who is really good at distribution, who's probably not going to go do the vertically integrated networking hardware play. But you have to be thinking about distribution, because that will, after all this hard work, like that can be the thing that ends up killing you.
It's funny. I'm always, because I'm non-technical from background wise.
Yeah.
So a lot of it I learn. I'm a constant learner, especially on the science side. But I'm chirping in their ear from day one: distribution, especially in these spaces, because it has to be part of your product design process.
Totally.
Because it's like, otherwise, I've seen just so many, especially a lot of folks in like the materials space or even the chemical space, like they all play the same playbook where they're trying to get these co-development deals from corporates. And it's just like,
those are more like, to me, almost deep techy, like where you really depends, like that one's tough, where like you have specific buyers for your product. And I think your buyers, like if you do the Porter's 5 forces analysis, probably have more power over you. And like they can
it's a monopsony for sure. It's a monopsony
for sure. They can squeeze you out.
Yep.
And then like that is where you get the valley of death, where you're like, wait, like I think a lot of yucky stuff happens when you have to like rely on like a couple of buyers. Whereas these other ones, it's kind of just like Faster Mechanica can build a supersonic plane that is like cheaper than, it's the same price as flying private now, and then goes up to like they build that. People are going to want the supersonic plane for the same price. Like that, there is a market for that. And so like, who they buy the battery from that they use to power the turboelectric adaptive jet engine, like that's a real competition. And like, then they have the power over some of those. But if you build like this fully integrated thing that just delivers a better, faster, cheaper product at higher margin, like I do think that ends up being like a real advantage. But each case, like the thing I love about this is like each case is completely different. Like each market is completely different. That's why I love doing this and like getting to explore and learn about these new markets. And maybe I'll wake up in a decade and I'll be like, damn, I like really actually didn't learn about these markets and I underestimated them. But that is a fun part to me, like trying to figure out like just what is the bottleneck in a market, or like what is the thing that if you solve it, like that actually does change the game, versus like, oh, it would be cool if this were a little bit better.
Sure. Well, it's funny, I think the modern day capitalist society, right? It purposefully disconnects the consumer from the producer, right? Like and we even saw it in this last wave of the internet with e-commerce, right? You saw these, basically it's a middleman economy, intermediate standing between the buyer and the supplier. That's like really, really hard. That's really, really hard to disintermediate, because it's based upon like being opaque, right? The system is opaque on purpose. The system's around production, right? And so I think what's fascinating is one aspect that I don't hear a lot of people speak about is, I think, which is part of what I would gather from your vertical integrator kind of component, which is, if you own the means of production,
of the thing, you have the ability to remove that opaque nature.
Yes.
And that's kind of like what consumers, like that's the direction that everything's going, right? It's what consumers want, and ultimately that businesses are going to do what consumers want, you know?
Totally. Yeah. I mean, it's funny, right? Like our mutual friend, Alex, who introduced us, like you look at QB, they're like, you know, it's not a factory. It's not like Katero where there's a factory somewhere in the middle of nowhere and like they're making pieces and then shipping them out. Like the factory itself is going out into the community and it's like right there and it's shipping, you know, it's shipping containers on site and you can see kind of how the whole thing works right now. You know, that partnership is through the local developer. And so there's, you know, like, and then maybe over time, like you just have a relationship with QB and like you see their factories in your community and you buy directly from them and it's like kind of all transparent. I mean, another favorite example of mine, and I think this is true and maybe something that I kind of try to get at by saying like compete directly, but is like also just a more direct consumer play. I think in a lot of these where like if you actually do all the hard stuff in the background, like you should take as much of the value as you possibly can. But like a base power company, I think is another one that I've written about that I think is like brilliant from this perspective.
What do they do?
Oh my gosh. Base power company is like absolutely one of my favorites here. Okay. They do residential batteries, starting in Texas, completely full stack. So, except for, you know, like, and I think another piece of this is you have to figure out the right level of integration. You're not doing everything. Like certainly day one, you're not mining your own materials at the very least. And then like where up that stack do you start your integration? Theirs starts at the, battery pack assembly and manufacturing level where the cell chemistry, you can take whatever the best cell chemistry that happens to be on the market at any given time. You like, plug it in and good to go. And so you're not taking that risk that like you're competing with BYD in China and they're just going to like undercut your battery costs. You're a beneficiary of those, you know, those prices coming down. But then they do everything from, you know, like installing the battery in your home. They're your retail electric provider. You don't buy the battery from them. You pay for the install cost, but then they become your electric provider and they trade the power and work with the utility.
Well, okay.
So like they do kind of full stack from that perspective and they're integrating a bunch of different stuff. And I wrote a piece on them, which if anybody listening is interested in the topic, I think is like a really good, not because of me, but because like they just thought so much through kind of each step of the strategy, like how if you move one thing, something else shifts and like that keeps happening and you have to build the system while the different pieces are kind of shifting. And I think they've gotten to a spot where like the system that they build is like integrated to just a level that makes a whole lot of sense. But they're like, to me, when I wrote the piece, it was before they'd actually put a battery in any house. And the big risk is not like, can you build these batteries and like actually trade the electricity and all of that? It's like, can you sell to retail essentially? And like, can you get them to put their battery in the house? And that they've gotten a resounding yes on, fortunately.
It's really hard to do.
It's really hard to do.
Really hard.
It's really hard to do. And they've gotten a resounding yes on that. And I think it's just better, faster, cheaper. And like, there are some of these where that's a different situation, actually. Like if you're in Texas getting, there's 50 different, 100 different, retail electric providers that you can choose from. And so there's some that are bigger than others, but like it actually is a bit more of a fragmented market. And so if you can say like, hey, actually, and this is like part of the Anduril story differently, but you'll see the point I'm making here is like, if you can be this talent aggregator, like this cutting edge talent aggregator in industries that don't have the cutting edge talent, you can say like, all right, great. We're going to apply like the best marketing and the most cutting edge marketing in the category where people don't do the most cutting edge marketing. That actually can be an advantage and kind of solve that distribution problem. And I think Base does that well. Anduril does that more on like the engineering level where you just, you know, collect talent that otherwise wouldn't go work in defense. And so I don't know, there are a bunch of disadvantages, but there's also a lot of advantages that you can play when you're a startup.
Sure. Well, it's interesting. This is, you know, what I mean, obviously I'm biased because for many reasons, but the concept to me that always stood about the vertical integration, and I think with base power, that's the name of it. You were just saying, which is really when you're aggregating these different, you're integrating these technologies, what you actually want is all those pieces to be commoditized, right? You just want it's cheaper, just for the reasons you said. And then you're integrating all this stuff and you want that to be more pervasive. And then because if you're the integrator and then you can figure out distribution, that's a moat to me.
That's a moat. I agree. Like that is, I think one of the things that prompted me to write the piece was like that tension between like, you want things to go really well for humanity. Like you probably don't want to be like the solar panel producer, but you'd love to be somebody who benefits from solar panels becoming really, really cheap and pervasive. And I think that's true in like So I mean, that most human wins piece and like all of like, I think this is just like the general law of business. And this is the Joel Spolsky thing, like commoditize your compliments, but it's also that's more active. It's also just like find out what's getting commoditized and like be a compliment to that, but like make sure that you're not that thing that is being commoditized unless you have like a really good plan to build a business that can make, thin margins, at huge volume as a commodity. But otherwise, like mostly trying to figure out what's being commoditized and get above that.
Yeah, you wrote that was part of the human strategy letter, which we'll get to. But all right, so let's step back for a second, because how did you get into this? How did you get into the writing? Like, give us the background a little bit.
Yeah, so I started my career in finance. Ended up going to a startup called Breather. Worked there for 6 years. We did on-demand kind of meeting and workspace. So like take a WeWork, chop it up, throw it throughout the city. I'm actually the office that I'm in now. Was the smallest space on Breather's whole network. We had like 500 spaces in 10 different markets. And then this one just kind of came up for lease and I'm in it now. But it was like kind of vertically integrated, but not vertically integrated enough where like you should probably actually, if you want to change the way the real estate and office space works, like really go for it and just buy the buildings. And, like there's just too many middlemen in the transaction. I think if you're leasing the space and like everybody needs to make a little bit of margin. So one, like learned how to do hard things. I ran essentially kind of like all of our operations at the end. So all of our real estate design, construction, like great team. I think we did a really good job. And we ended up being in a market where WeWork and Notel, just spent like drunken sailors. And like it was a tough enough business as it was without that happening. And then that happened. So like learned a lot about one, how you do the hard thing, but then like also how important it is to pick the right hard thing to do and like how important strategy is to all of that. But I had kind of like one formative experience there, which was in the beginning, we just had a bunch of really small spaces. We had an investor who was also an investor in Uber who was like, you just have to go out and get as much density and get as many spaces as you possibly can. And the difference, of course, with Uber is that if like a driver is sitting there without getting a ride, like you're not paying that driver. If a space is sitting there empty, you've put CapEx into the space to do construction, and then you're sitting on a 5-year lease. And so like you're in real trouble. And so we ended up in a spot after that. And we like literally launched a space a day for an entire year, like an office space that we like designed to construction on, furnished. Like it was an intense pace with a fairly small team. And where we ended up was just like a total supply glut. And so like we had negative 25% gross margins. We booked these things hourly. So we just had like a team of, cleaners like running around the city, cleaning these things, and like just like actually not a good business at all. And so one winter break, me and a guy named Ben Rollard, who runs a company called Composer now, Genius, we just, and ran kind of data science for us. And then we just locked ourselves in our office over a winter break and like came up with a plan. And then like I wrote the two of us wrote a long kind of like strategy memo that we sent out to first the exec team and then to the whole company on like why this other way that we should do things like was actually better and like mathematically and structurally, just like everything competitively all made sense. And we did it and it worked. And within like, 6 months, we had positive 25% gross margins and like trending in the right direction. And we like rallied the company around it. As like one, strategy actually does matter. Two, being able to write in a way that you can get people, like everyone's in the whole company's job changed and got harder in that period because of the plan that we came up with. And so like that's very cool that you can like have a plan, strategy matters, and then you write it and then you like send it to people and then they just like do things differently. So I left Breather at the end of 2019 after we brought in a CEO, but had started kind of writing, just took a writing course, David Perez Rite of Passage, started writing. And then when COVID hit right after I quit, so I couldn't start the physical space thing that I wanted to, fortunately, I just started writing and, one thing led to another and investing kind of after that.
Cool. All right. So let's talk about, because I think you represent really the future of where a lot of capital allocation is going to go, which is kind of this, people sometimes call it like the creator VC. So talk a little bit about this transition. You start writing about things that you're interested in, and then how you kind of got into, I think you're on fund 3, is that right? Yeah. So kind of just talked about that kind of transition and how that all came to be, of actually deploying capital.
Yeah. So I started I had a few friends who were starting companies and asked me if I could like kind of write about their company and like break down the strategy and all of that. Did that. And then, for one of them, a friend put an SPV together and I was like, oh, I could do that. And so I started doing SPVs, for some of the companies that we wrote about. That became kind of a pain just on both sides, like kind of herding cats in an SPV each time, not being able to go to a founder and say, I commit to this amount. And it's like, I don't know, trust me, like I'll get some amount of money. And, and like, it was just, it was the most interesting companies I could find at the time, which are nowhere near as interesting in a lot of cases as the most interesting companies that I'm able to work with now, just having done this for 5 years. And so started a fund. Fund one was just kind of, fund one and fund two were both 100 companies, like, let's go wide and not miss anyone. Okay. Yeah. A lot of companies, like, kind of intentional strategy, a lot of companies fast deploy. In hindsight, it looks like a very 2020, 2021 strategy. And like, certainly it was. Mm-hmm. But at the same time, like, I think the 2021 fund is actually going to do, like, fund two is doing really well. And so like, there is something to the don't miss winners thing. And like, there's definitely investments in there that I wouldn't make now that are doing really well. So there's pluses and minuses to everything. But I think for a kind of fund three in the future, really limiting it down both on the thesis and the number of companies that we work with is as much a kind of investor product fit, as anything else, where, one, I feel really confident in this thesis, and I think it's like kind of underappreciated. And there's a lot of more hard tech now, but I think a lot of that ends up being like kind of space and defense, as opposed to like, what if you did that for like everything? And so I think there's just like this opportunity, that just feels like flashing lights to me. So focusing down on that, but then two, I just want to work really closely and write these like kind of, as deep a piece on the companies that I work with as anybody has. And so like really kind of finding good, like kind of fit there. And I think it just like feels right being able to do these kind of like fewer, hopefully like 10 investments a year, but like really kind of going deep with the company and providing hopefully something that other people, other investors can't, something beyond capital. I'm like, I don't know if I'm bullish on creator VCs generally. And like, maybe that's a hot take. I think it has to be specific. And I think in 2021, there were a lot of like people who had big audiences who could, like show the product to a bunch of people. And I think that's valuable. But like, I'm hoping that it's not just like, Packy invests because he has 200,000 people on his newsletter. It's like really like he can explain our company better than anybody else can. And that's valuable in attracting talent, investors and all of that kind of stuff. Mm-hmm. I'm like, I guess there's a pair trade in there where I'm like, I think Patrick O'Shaughnessy is another example of someone who does this like so well. Like, he's like, he is a creator, but like in the category that he's talking about in investing. And so I think like that, that is a big distinction. Is like, are you a general creator or are you like obsessed with this thing that you do?
So it's actually, so I have a whole thing. I mean, oh man, you're going to get me on my soapbox here for a minute, because I have a whole thing on this, because there's no such thing as the creator economy. It's just becoming the economy. And so like, there's a fundamental difference, which is kind of where this guy wanted to talk to you about this piece, which is like the bucket that I put someone like of your work in, which is like creators that are focused on kind of high value industries that actually that actually but have real authority in those spaces because of the knowledge and the work that they're doing. It's not someone aspiring to be a celebrity or aspiring to just have an audience to have an audience.
Yeah.
It's like, these are two very different things. And that second piece has just come crashing down. That's why, like, when you talk about the creator, so anyways.
Yeah, and there's authority is probably like too strong a word and not what I'm going for. But like, it's just an obsession, right? Like, it's a thing that like, if I were not getting paid $1 to do this, I would still be writing about this stuff and trying to meet the same people and spend time like studying the same companies. And so, maybe in 20 years I'll be an authority on this stuff. But like, for now, it's just like, I can be the most obsessed with this.
No, I totally agree. Yeah, it's just your work, just what you do. I get it. So on this, just so kind of the folks know, just kind of if they're building in the space and stuff that's relevant for what the thesis is. So can you just kind of drill down a little bit on that? So kind of what you are focused on, general check size, and currently, if you're changing.
Yeah. So it's funny. The thesis is like, I'd say 80% vertical integrators and then 20% like crypto. And I think I can maybe fit your decentralization theme, a bit here. And I've like written a piece, decentralization a while back, kind of like talking about like I just think a lot of things are decentralizing. And so like there's some overlap there, but I just like generally as like a, way being, you either like, I want you to be like decentralized or I want you to be vertically integrated. And like, I don't like the middle stuff.
Sure.
But, focusing for the purposes of this on kind of the vertically integrated ones, like we're really looking for, and I'm doing kind of more closer to Series A, because I think like I'd rather just like be in the one. And I think you can kind of tell a little bit better by the Series A. But looking for a company that's kind of doing all the things that we've described.
Yes.
in an industry that is dominated by a sclerotic incumbent or multiple sclerotic incumbents, and like really going, like, bringing together the best possible talent, like being kind of clear-eyed about the capital that you'll need to raise, like have the kind of right system level integration, and, not deep tech as much as like really just a vertically integrated solution using the best technology that's kind of like proven out. And that could be in like, I was talking to somebody about this the other day. I don't know like what category I'm looking at actually. Like, there are plenty of examples in the portfolio where like, QB again, like what I've looked at housing and I'm like, that's a market I'd love to go and do something like Katera did. That seemed like a fun adventure for investors. Like not at all. But then you talk to Oleg and Alex and you're like, actually, this makes a lot of sense. Or we have a telco in Colombia, which is like, clearly I'm not looking for telcos in Colombia. I thought like telcos might be like the wrong kind of layer of the stack, but they had a plan to like really actually just deliver a better, faster, cheaper product at higher margin than incumbents. And so like, absolutely. And it's like a just killer founder. And so like category, I'm open, but it's like, really, are you actually going for the thing? Like, do you want to sit on top of the industry that you're in, as opposed to like, you found this like niche where you can sell a particular product and make something like, I want like the whole thing, the whole enchilada.
Okay. So just to kind of wrap that piece. So, and then you said, are you typically leading? Are you co-investing, not leading?
Typically co-investing, not leading.
Okay.
Yeah.
And kind of general
like,
check size?
Like $500K.
Cool.
And hopefully going up soon. But I think on the not lead thing, like there has to be an alignment with like the value you deliver. And I think like, I don't think like a deep dive is like worth your lead spot at the Series A, but I think it's like certainly worth having on your cap table. And so I can like make that argument like very compellingly.
No, I get it for sure. Well, so it's interesting. It's probably a good segue. You mentioned, talking about the vertical integrator piece. And, I actually think the vertical integration is a critical, requirement. If we're ever going to see more decentralized production, I actually think you need to do that. And so, when you think about decentralization, is that even like a theme that you think about? Or not necessarily? Yeah, I don't know. Is it something you think about or not really when you're thinking about and looking at companies? And
I think it's super context dependent. Like there's some things that should be and some things that shouldn't be. Like actually, I was going to say that the telco has like some aspects of it where you like kind of take things and break it up and make it smaller. That changes the economics of the system. QB obviously is there, but something like, Fuse Energy, which is the fusion company that we did. And that's going to be, kind of centralized-ish facilities for a while. Although even that, like they can sell pulse power generators that are much smaller as opposed to like, and then like start generating revenue and having those out in the field and testing them and all of that, as opposed to waiting to build, like the huge multi-governmental tokamak that they're building in Europe. So I guess relative to that, it's a decentralized way to do fusion. But I'd say that's like a secondary thing to better, faster, cheaper, higher margins. And often that just ends up being for the certain news, like QB, you couldn't do centralized. Like their whole thesis is you cannot do this centralized. And so like that makes sense.
So do you know Ian over at Cantos?
Love Ian at Cantos.
All right. So I'm actually an LP at Cantos. And so that's
amazing.
That's how I got really more like deeper into the industry. I mean, I was already investing kind of full stack industrial tech. That's what brought me to how I got connected with him originally. And I mentioned to him, because we recently had a conversation, which is really important for the audience and for really what my hope is here, which is these have to be market-based solutions.
Yes.
It's just so important that, because if they're not, then it's just nothing scales, nothing has any of that type of impact.
This is the lesson of climate investing for the past X number of years.
Totally.
Unfortunately, and I guess there's like a lot of companies in my portfolio that would have been called climate companies, maybe, but they're like power companies or electrification companies or
sure,
whatever. But you need to be there in the market. I agree. Like you're just not, it's not going to last.
Totally. Yeah. That was one of the things that's interesting. Cause a while ago, I threw around this idea of like fund, no fund. And a lot of it is, for me, is also just a really good exploratory learning process, the investing. And what I landed on was, which is the benefit, I think, of just investing your own capital, is you can also just invest in things that you want to invest in and people you want to invest in, right? Because like I definitely have a portion of the portfolio that I would say I just like, this needs to exist in the world. But if I was managing a fund, it's a no. So it's like an interesting it's an interesting trade-off a lot of times. But anyways, my point is, it's really, really important for people to understand if you're looking to build in this space. And this is why I like having folks like you and Ian, like being dogmatic and like very like clear, like this thing you have to be able to compete.
Totally. I mean, like, my hot take, and it's maybe not as hot anymore, but for a while, my like hot take is like, the good thing about a climate company is like, if you are required to do, like, if you're forced to use fewer resources, like it should actually just be better, faster, cheaper, because you're like doing something with less. And like, if it is, then awesome. And like, you have a cost advantage and you should be able to go out and win on it. If it's not, then like, it's probably not gonna live for too long and make the impact that you want it to make. So like, I guess the perfect is the enemy of the good or whatever. But I also just think like a lot of these solutions ends up like the market crafts a pretty damn good solution a lot of the time. Yeah. I love Ian, and Ian's part of a longer term member of the fan club, but I think we're both equally passionate members of the Earth AI fan club. And so like, you know, have respected Ian for a while, but like really that shared bond around Earth AI has brought us closer together.
I'm in that as well, actually.
Amazing. So I love that company. I think it's going to make us trillionaires. I love them.
It's like very interesting.
Yeah.
All right. So it's a good kind of transition to, do you really believe we can start making things in the West again?
That's a good question. Yeah, for sure. It doesn't, I mean, like everything, who knows?
Mm-hmm.
But yes, I do.
And what's your take on, because for me, this whole kind of journey and the first step is this more decentralized. You got to start making stuff just closer to where it's being consumed. That's just like the first part of making commerce more human, right? So what's your take on where we're at in the world of kind of physical AI, embodied AI, in lieu of the recent kind of Cosmos announcements and NVIDIA and, you know, the handful of humanoid robotic companies kind of really showing some progress? I don't know. What's your thought on when that actually starts to hit industry? And
yeah, China's also really good at AI, and they're probably better than us at robots right now. So like, you know, I think there's a lot of, that's our advantage, and who knows if it actually ends up being our advantage. I will say, I was talking to somebody recently about this, that like the biggest bull signal that nobody's talking about is that like everybody thought TSMC's Arizona fab was going to be a disaster, and then it just wasn't, and we just like did it, and we could just do it. So like, I think people are like maybe too short American manufacturing, and like there's been like the resurgence of excitement, and then people saying like, yeah, but like we don't have the labor or the whatever, that like these 50 things that China has, or that even Taiwan has, or there's the BG2 podcast where they're just talking about like people in Taiwan are willing to like sleep on the factory floor and work there for 70 years in a row and whatever. And so like, we just don't have that. And I bought that. Like, it's not like knocking them. It was like a rational argument. And then like, we just go out and we can import great talent, and we just are doing chip fabs now. And that's awesome. And so I'd say like, I wouldn't be short, America when we put our mind to something, but there's like a lot of work to do, and like the policy and the technology,
totally.
Like, everything has to be aligned in the right direction. And like, we have to move now, but it is possible. In terms of embodied AI, I mean, I think it really depends on a bunch of the systems. Like, I think humanoid robotics are a category that I haven't invested in yet. I think it's like super exciting, but is one that like is really, really hard and also competitive, which is just like a really tough combination. And I think foundation models are similar-ish, although I think that there's, you know, OpenAI has built a brand, and Anthropic I love, and is building a brand. So like, I just don't think about that enough to know where the value accrues there. But like, I don't know, it seems like very hard and expensive to build humanoid robots. And then you're like competing with like also a bunch of other geniuses who are pretty well funded. And so it's just like a tough spot to me to play in. But, you know, like Anduril is like embodied-ish AI, and like a bunch of these companies have AI at some level or another kind of in the system. So it depends what you like define as embodied AI, but I'm sure that will continue to progress. And like, you know, humans will probably be wearing GoPros to like start doing more video stuff and you know, feed the machines and make them smarter. So we'll see, but no, like great answers. I haven't spent a lot of time in humanoids just because it scares the hell out of me.
It is, in one way, it's like very like kind of dystopian on some level.
Totally.
But, you know, I think the reason I like to ask that question a little more broadly versus drilling down into it, it's just like kind of getting people's gauge on it. Cause like for me, I think what you hit on, which is the big missing link, is like, and I think we are going to get it, especially with the folks that are in the White House and kind of really the Silicon Valley infusion of what's happening in the administration, right? We need a real industrial policy as a nation. Like that's what the missing point or the missing piece is to me.
Totally.
And so I think we'll get there. I mean, it's not going to be a straight line, but I mean, man, if we can figure that out on top of the technology that in the work ethic that comes out of the US and the capital that's being deployed, I mean, to me, it's like, for me, it's a no-brainer. I'm pushing all the chips in on it. So yeah, but to me, it's like, and I think going back to your point of just kind of being an optimist about this, I'm like, man, it's like just the best time ever to be alive, and just like how much negativity and pessimism. And, you know, it's interesting. I saw it, did you read any of Ray Kurzweil's books? Any of his stuff?
Yeah, I mean, I read The Singularity is Near like early. It's
Okay.
I've been singularity pilled. I'm like less so now, although he's been right. So, you know, like don't bet against Ray Kurzweil in the curve, but I think we're like overhyping, AI taking over everything right now.
Sure. Well, the reason I just wanted to make that point, which was I think it was on a segment on a Joe Rogan podcast where I saw him and he was speaking and he just put a chart up on the board of historical rate of like the rate of which technology changes, right? And just the progress that we make. And he's like, and he just makes the basic thing that which we know. It's like humans just think in such small time frames. And he's already like, the energy thing's figured out. It's already done. We're going to figure the energy thing out, and the renewable energy thing's already done. It's just like, you know, and so I think to your point, it's just like remaining optimistic is so important in this time. And yeah, that's the one aspect I'll tell you that I get a little scared about, is the pessimism, because if you start getting pessimistic about it, then you're not saying, hey, I need to learn these new tools.
It's self-fulfilling for sure.
Yeah. And
both of them, optimism and pessimism, are self-fulfilling.
Yeah. And you're just like, and you need to upskill yourself, especially people around our age who might be in a job that's probably going to be replaced very quickly by technology. And so anyways, that's a good, I guess, segue to the human strategy letter. Where did that come from?
I mean, it's like a lot of this doom and gloom where like people seem happy to just be like, I don't know, it's over for humans. And like tech is going to replace us all, and it can like, you know, it keeps getting smarter and smarter. And so, you know, I guess we're like kind of done, and like enjoy your last kind of couple of years of being an economic agent or like even useful in any way, shape or form. I mean, that's just like clearly to me, not what's going to happen.
Sure, of course.
And also like pretty easy bet to take, because if that is what happens, like we'll all be dead and who cares? But I mean, like to me, it's clearly not what's going to happen. But I think, and to your point, optimism is important, but like being clear about it is important too. And like actually thinking through like what's the cause for my optimism. And so that was an attempt to be like, look, maybe this time is like really, really, really completely entirely different. But throughout history, like we've commoditized each other, and like the more, you know, pervasive skill is something that like people who have a bigger idea are able to kind of go out and use, whether it's expensive or cheap or whatever. And then that gets cheaper over time. And then you figure out the next, like that just keeps happening. I thought like this example of Albert Einstein and Grossman, who was like the guy who helped him out with a lot of the math and helped him figure out the math that made general relativity work. Einstein was like essentially commoditizing him. And you've never heard Grossman's name, but you know who Einstein is. Einstein couldn't have figured out, you know, he like had the idea and he had the thought exercise for general relativity, but he couldn't have like actually like squared the circle, I guess, without having Grossman kind of figure out the mathematics that made it possible. And you've like never heard of him. And like, that was just the more commoditized skill. And like, by the way, that's the thing that, you know, now you could ask AI, like, hey, I have this idea. What's the math for that? And like, it actually like might do a pretty good job of getting that. But like, I've yet to see an AI that's like tapped me on the shoulder and been like, hey, what's it like from the perspective of riding on a photon? Like, maybe we'll get there and like, I'll have to update my worldview, but like, I haven't seen that yet.
Sure.
And so like, I don't know. I think, so one case is like kind of short term economically, like you can just keep going to the next layer of the stack. And like, as we were talking about before, you know, being a complement to whatever is commoditized seems like a pretty winning strategy throughout history. But even if like economic activity gets commoditized, there's still like, you know, great. Now we can like, we've cured cancer and we can like travel throughout the universe. And like the whole point of being a human is to just experience all of that. So like the more experiences we can support, the better. Like the more people who live longer is like just more human experience. Like the more things we can do, more diversity of human experience. Like maybe, you know, the economy gets abstracted away at some point, and like, awesome. Like, let's go. Like you have to like be ready to go take advantage of that and like use that to experience more than you could have otherwise. And like, that's a thing that even if AI can experience things, like, who cares? Like, it's not like that's actually like not competitive. And that's like a wonderful thing that we all get to experience this, you know, in whatever way we, you know, in our own way, and like as ourselves. And so like, bring it all on. Like it's a very fun time to be alive. And like,
Sure.
if that like, you know, richness of experience is an important thing, then like, what a great time to be alive.
No, I totally agree. I would say it to everyone out there. It's a highly recommended read, and we'll put a link when in the episode, because it was, I just ripped right through it. I was just like, it was great because it just got me so. You know what it was, man? It was like it just gave me a lot of positive energy too. It was already things that I was kind of maybe a little bit of confirmation bias, like from my own feeling, right? I guess, but just really like good positive energy. And I think, you know, one of the things I took away of that, which is when you think about skill set and things you need to be thinking about to kind of succeed in this post AI world, I kind of go back to the integrator thing, right? Like I must say, like, you actually, like, the best skill set you have, like vertical integrator, we're talking about the physical world, but also you just need to be an integrator.
Yes, totally. I think that is like maybe the best possible takeaway from that piece, from just what I've been thinking about recently, is like, if you're going to keep getting new tools, like your job is to figure out how those tools can work together in really interesting ways. Like no matter what those tools are and what level, you know, like what level of the stack they move up to. I wrote this week about the importance of questions. And that one I wrote about like being an entrepreneur and Most Human Wins, about being an entrepreneur and having a mission. And I think like the more you can figure out, and I'm still answering to figure out like what my question is, but like if you have a question that you're trying to answer, like if you get this thing that is like a genius and can help you answer questions, like awesome. And then you probably realize like your question isn't big enough. And then you have to like think about a bigger question. But like, if you have a mission, anything that helps you with the mission is great. If you have a question, anything that helps you answer your question is a useful thing. And so you just have to like put yourself at that like kind of curious level of the stack. And whether it's not a like, because machines can't be curious, it's because like, if you're curious and you get better tools, like, wow, what a cool, like amazing gift and time to be alive, to be able to use those tools to like scratch your curiosity.
No, I completely agree. I think the thing that worries me is, though, the vast majority of people need a lot of structure and directions. They don't actually, it's hard for them to do that. That's what I found. Right. Like to like, you know what I'm saying? It's like,
yeah, yes. And I think like there is, and I talked about this a little bit in the piece too. Like, I don't think this is like people's fault generally. Like we've organized a system to do that, right? Like,
Sure.
The Prussian education system,
Totally.
Like the industrial education, whatever, it's like meant to like have people not ask questions. So like, I do think, you know, there will have to be, you know, a revolution is way too strong a word, but, you know, there will have to be kind of a rethinking, and there will be kind of naturally anyway. We're talking about kind of markets, like people are going to be like, why am I going to this school that teaches me how to do the thing, like all the things that AI knows how to do? Like I should probably be doing something different with my time. Like the amount of conversations I've had with people who are like, yeah, I'm not doing a 529 plan. Like my kid's definitely not going to college. And like maybe I actually am like, I went from being bearish college to now bullish college. And like, I think like college will just change. And like I would love to go to college now. If I had all the time in the world, I would go to college now. Like, I think I'd be way less wasted on me than it was when I was 18. Now I'd be like, holy shit. Like I'm just in this place where like all these people are willing to answer my questions and like, just like shoot the shit with me on like crazy ideas. And like, there's just these huge library, like awesome. Like I want to do that. But I do think like it'll all have to change. And like one of the things that like, you know, it'll hopefully go back to like some sort of like modern kind of like ancient Greek, where you're just like asking questions and everyone's curious and you're like beating up each other on ideas. And I'm hopeful about that as well. And I think like, obviously there's going to be a transition period in a lot of this. And if like you're really set in your ways now, like it might be like, it's time for you to like really do some soul searching and think about that. But I think like the next generation, like if I think about my kids coming up, I would imagine a lot of their education will be about like how you ask these questions and like how you engage and how you integrate and all of that. And I think like, you know, my other weird take is, and I wrote about it in the piece, like I've been meditating a lot more. Like I think like that whole thing, like just being like, you know, being able to operate at that level where you're just like kind of more conscious and excited about everything that's happening and taking things as they are, I think is also going to be really important.
Yeah. Otherwise it's just too overwhelming. It's like, I think the first version of that is like waking up immediately and checking your phone, right? That's like the first, right? And I just
deleted Twitter for the millionth time. We'll see how long it lasts. Yeah.
Who are like maybe one or two people that kind of really come to mind when you think about your work and kind of the stuff you're interested in that have really influenced yourself? That I know you would recommend other people are a good read or a good person to follow. I don't know if anyone comes to mind.
There's so many. Actually, Ian, I think it's like, actually, you know, he's a mutual friend and we've talked about him already, but he's like written some really good stuff on this. I think Oliver at A16Z, American Dynamism, has written some really good stuff on this. Ben Thompson, like always, if you're just like thinking about business strategy, I think they're like Carlota, Perez, feel like great. Like I actually think it's like a lot of what I like to do is less kind of like current and more like either really current, like talk to the entrepreneurs who are like building stuff and figure out like what they have, or like go back and figure out kind of like what are the frameworks that we're looking at. There's a paper from the 1990s. I haven't written about it yet 'cause I think I'm like probably overfitting what she's going for, but it's called Architectural Innovation. And it was like right about the same time that Clayton Christensen did, the Innovator's Dilemma. And as like, disruptive versus, why am I blanking on this right now? It's like my whole.
Which one? Innovator's Dilemma?
Yeah, it's disruptive innovation versus. This is like incredibly embarrassing. I've written about this maybe 1,000 times. Sustaining. Yeah. Disruptive versus sustaining innovation. And then there's this other one, architectural innovation, which is like a lot of what we're talking about. And she just didn't popularize it as well, but I think it's like equally interesting, where it's one of the reasons that incumbents struggle is just like they have an architecture that is like built up. That's on the product side. That is on like the way that different departments talk to each other. And so it doesn't have to be this like disruptive thing that comes from the bottom, whatever that beats them. It can also just be like a little change to the system in the right spot that they just like aren't able to respond to. And I think like my bet is that kind of innovation happens a bunch more now. And so like trying to just find the best ideas, like, current or past, but hopefully think of something like in a different way than other people have. So I end up like going back to old stuff more too.
Cool. What's the last book or podcast you listened to?
Oh man. The last podcast I listened to was Chris Williamson with Eric Weinstein, which is great.
Okay.
Which is really, I just think that was it.
I get lost whenever I listen to him speak, but
totally. And then the last book, I'm like reading Robert Caro's. I just read Robert Caro's Working. It's the last book I finished, but I'm reading Anna Karenina, and then I'm reading, and I normally do one book at a time. I don't know why I'm doing multiple at the same time now, but I'm just in one of those spots. I'm reading David Foster Wallace's Everything and More, which is his like exploration of the concept of infinity. And I've just been on a David Foster Wallace kick and like reading his articles. I've been reading a bunch of just like profiles generally, but a bunch his. And the fact that like someone could write Infinite Jest and the piece that he wrote on Roger Federer and just like his knowledge of tennis, and then like a really like genius level breakdown of the history of how we got to infinity. It's just amazing that all of that lived in the same brain, like the range and the depth and the whole, it's just like unbelievable. So that's where
cool.
I'm at.
Well, great. You gave the folk, the audience a bunch of good resources. Cool, man. Well, listen, I really appreciate you spending some time and being one of the early conversations, and hopefully the first of many. Hopefully,
you're good already. This is fun.
Where can people find you? How do they reach out to you, or Not Boring, if people are building in the space that's relevant?
Yeah, I'm the website's notboring.co. I just bought the .com, so hopefully it'll be there soon. And Packy at notboring.co, and then at Packy M on Twitter.
Cool. Great. Well, thanks, Packy.
Thank you.